Greg, quick question for you that we were kind of talking about during the break, which is this retirement question. If you're 65, 67, 68 years old, and you're thinking, well, geez, I don't know if I have to withdraw money now as my required minimum distributions for my 401ks, et cetera, and I'm going to obviously have some form of tax liability with that. The question is, should I invest in single-family rentals? I've been asked that question a lot. I always tell folks, well, you have to understand your investing personality and you also have to determine your time horizon. But I think you have a really, really good response for this.
Well, I think if you're in your 60s, you've got 20 years, maybe 30 left on Earth, right? If you're into real estate, like what are you going to do, right? You're going to climb in the coffin and wait 25 years? No, you're
Right.
going to live.
Yeah.
You're going to do the things that you want to do. And if you've got a bug that you're into real estate, the thing that I've learned, the reason for this radio show, the reason for my professional existence is that I've learned that all around us are people that I've, lovingly categorized as real estate junkies. All right. Not get rich quick flippers, but people who just love the idea, the instinct that drives them to want to accumulate ownership of real estate. And I hear tons of stories of people that have that built in wiring because of an uncle or an aunt or a neighbor or a father or a grandfather who just did that. Just did that. They just accumulated real estate. Like somebody who I met yesterday, who's one of the employees at Renters Warehouse, who I just met, had coffee with. She told me that she's into real estate and she joined Renters Warehouse several years ago. Her father or grandfather, I'm blanking right now, but he didn't finish high school and got a job in Southern California, like whatever job,
Mm-hmm.
like, bussing tables, 3 jobs, that whole just immigrant story, working his butt off and trying to make ends meet, and had an opportunity that came along the way because he was sticking his money in the coffee can.
Mm-hmm.
He had an opportunity to buy into him and a partner to buy a city block of real estate back when that neighborhood was in bad shape. The guy retired at 45 because he did that at like 28. All right. So 20 years. Okay. He had a 20-year play that ended up playing out to where he was a young retiree. So show me a 65-year-old retiree and that same 20 years could be the difference between A, having a lot of fun and doing something really constructive versus just waiting. The other one could be that what you do to set your kids up and your grandkids and your great grandkids could be dramatically different based upon what you do from 65 to 85 in the real estate market.
Mm-hmm.
So I say go for it. If you got a 3-year time horizon, maybe not. But if you've got 20, you've got a lot of experience. If you're 65 years old, you've seen a lot. And probably, in my experience, if you're 65, you've actually learned to have even more confidence in real estate because you've watched it for that many decades, even go through the craziness of 10 years ago and come back swinging. I think it's always a great time to own America, right?
Ah.
And 65 is no distinction there.
So now, just out of curiosity, now that the merger is complete and the partnership is complete between Own America and Renters Warehouse, that means you can technically assign ownamerica.com to me, and then I can run with it. That's exactly what I'm going to do. I'll write a book and now have my own blog and all this stuff. So thanks, Greg. I appreciate that.
Yeah, I'll give you my wiring instructions so you can I'll come up with the number. Actually, you know what? We talk about compartmentalizing your investments. Which of the real estate investments that you have would you like to deed over to me in return for my wonderful URL? You go ahead and pick out which one of those is your URL property.
Yeah, exactly. The naming, right? Naming the single family rentals. I think that's such a good idea, because now it's closer to home and it's so much easier to touch the future with. So that works out really well. A listener question. I appreciate the. Retirement feedback, because I've been getting that a lot from folks, and it's always good to get a different perspective. Last question here. Rachel from Des Moines, Iowa. Quote, I'm hearing competing suggestions about having a mentor. Some investors are for it. Some are telling me I have to figure it out on my own, which is true here. How do you evaluate a mentor, and how much should you pay for one? Great
That's a
questions.
really, really interesting question. You know why? Do you know why mentors in real estate, people say that they're necessary? And do you know why no matter when you turn on your radio, you're going to hear ads for real estate seminars for free? And do you know why there's always somebody showing up at the top of Google with a great new system, coaching program, seminar system,
All
DVD learning
money.
system.
All money.
The the reason why, yes, of course, and the reason why there's so much demand for those things is there's never been any professional services for those things. Like imagine if you wanted to invest in the stock market and there was no place to do it. It
Mm,
was only DIY. It was only do it yourself. And then the answer was, well, if I don't know how to do it and I can't walk into Schwab or Raymond James or Merrill Lynch and get any professional advice, well, I have a couple of choices: learn it on my own and or get somebody who's done it before me to teach me, a mentor. And if I'm going to get a mentor, I guess I have to pay them.
right.
So now I'm paying somebody who's not actually professionally trained necessarily. They may have a lot of experience from having done it. So I see that people's sense that there's a need for a mentor
Hmm.
is a symptom of a broken system where we have a splendid asset class. And until recently, I mean, I'm not trying to plug Renter's Warehouse and what we're doing, but it's the reason we're doing it.
That's right.
That you should be able, there should be a household brand, a household name that's a brand that you can walk into an office in your town, sit down and execute, research, plan, and execute a long-term investment strategy, but not in stocks and mutual funds and not in insurance products, but in real estate. And for reasons that we could go into, just hasn't happened. So there's a dozen household names in real estate. There's Coldwell Banker and Century 21 and Better Homes and Gardens and Sotheby's and Keller Williams and Remax and local. It goes on and on and on, but none of them stand for real estate investing. So that's why we're doing what we're doing at Renter's Warehouse, is that you should be able to conjure up a household name, stop into a place with the same kind of credibility as a Schwab or a Raymond James, walk into a person with a pulse and a personality and training and expertise and experience, and pay them by virtue of buying the property through them. So there's a commission involved in that for them, and then pay them to manage your property. So now you have a profession, a business that you're a customer of, that you can demand accountability from.
Hmm.
You know, one of the things that I love is the saying that, you know, a throat to choke. It's nice to have a local throat to choke if something goes wrong, right? It's not an online experience by itself anymore. It's online and offline. So mentors are great. I don't think paying a mentor makes it a mentor. I think mentors don't get paid. Those are people who want to help you out because they've been a little further down the path than you and they want to help you out. A paid mentor, well, that's a coach, and I don't think you need him anymore, especially if you're in one of the markets that we serve.
That's fair. And you also have all the tech. You have YouTube as well. And you also have folks that are open to sharing their experiences online anyway. You can also check out thinkrealty.com. We have an awesome forum where folks are always going back and forth on the latest strategies, et cetera. So that's always another really good place to start. But entering into conversations with folks that are experienced in your local market, in your niche, it just works, right? Take them out to lunch,
I
take
give
them
a
out to
good
coffee.
example.
I mean,
Yeah,
come
and
on.
the accountability.
Yeah.
The accountability loop is closed then because they're going to have to help you long term, so they have to do it right in the beginning.